Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. So is it time to short the markets? We have seen an incredible rally from the low here all the way to where we are currently sitting. And as you know, on this channel I have been calling for a retest of that low, if not a lower low, to our next bear market target, which is the 2100 level right here. Before I get into the analysis and where I think we're going in the next few days, few weeks, I'm going to quickly cover what's been happening in the recent days. I know we had a trade going from the 2600 level right here all the way down to the 238 level, which did not play out. So if you watch the video where I make this trade setup, I take a look at this recent move up in the markets, and I said it was overextended. We were seeing bearish divergence on the hourly chart, and we were breaking this level with this divergence and while having overbought readings on the hourly chart, which is never good. So I suspected this would be a false breakout, which it ended up being. We came back below this level, the 2600 level, and we gapped down the day after. Unfortunately, we reversed before hitting my final target, which was the 238 level here. We reversed and then gapped up back to the 2600 level. So if you were short like I was and you saw this gap, this was a perfect opportunity to get out of your short. We were breaking this downtrend line. Breaks of trend line can be very powerful. Just look at the break of trend line here. As soon as we broke this, we started having impulsive selling. And it works both ways. When you get a break of the trend line, even if it's a gap, a break above a downtrend line, you're going to get a rally, and that's exactly what we got. We got a nice little rally. So in other terms, if you were bullish on the S&P 500, this was your buy signal, and if you were short, this was your sign to get out of your short position. Now, if you've been watching my videos, you'll know that I've been waiting for a break of this trend line since back here. I was talking about a potential break of this trend line since back here. I wanted to see that. I wanted to see not only an MACD crossover, which we got right here, and I wanted to see a break of this trend line, and that would make a beautiful bull trap so that we can then resume the movement down to lower lows. Now, initially we did get that break of trend line here. The trend line was originally like this. This was the more accurate trend line from the top. We had two reactions here, and we did break this trend line. We had a nice green candle going through it, but we got another break of trend line here after we cleaned up this trend line. We hovered below it before breaking it properly like we should have the first time around. Now, is it time to short the markets? How bearish am I? Seeing where the S&P 500 is at currently, I'm going to take a look at many things I've been talking about over the past few weeks, and then I'll be giving you guys my opinion on what I think is going to happen and how I'm going to trade it, what kind of scenarios I'm expecting to play out potentially. Before I do so, make sure to drop a like if you enjoyed this video. It helps out my videos tremendously, so thank you very much for doing so. Now we are at significant resistance. I'm going to zoom out of this chart a little bit and we can see that we're currently sitting at resistance. This is an important level on the S&P 500. You can see we have a few reactions here, and we're currently testing this level as we speak. And if you remember from back here again, I said when I was expecting a bull trap, when I was expecting some type of a rally in the S&P 500 back here, I said that this 272 level would be my max target, and it's remained my max target since then. And so as you can probably imagine, I am looking at potential short opportunities in the markets. One of the first rules in technical analysis is to sell at resistance and buy at support. So if you sell your long position at resistance, or if you're shorting the markets at resistance, you are respecting the first rule of technical analysis, which is definitely good news. Now, obviously, just being at resistance doesn't make a trade setup complete. We're going to take a look at a few other things. First of all, the Fib retracements. I think when taking a look at counter rallies, Fib retracements can be tremendously useful. So we're going to take the Fib going from the top here, the all-time high, all the way to the bottom, the lows we recently put in. And you can see this level doesn't really correspond to any fib retracement. But that does not really matter. What is very interesting to me is that we are in the green zone. And so if you don't know what fib retracements are, they can be used in many ways, but one thing they indicate is how proportional is this counter rally compared to the move down we've seen so far. And so the fact that we are in the green zone means that this is definitely a possible counter rally reversal point right here. Anything between the 38 and the 50 retracement level is what you would consider the ideal range for a reversal of a counter rally. And you can go back and check in every single bear market, the counter rallies tend to be within this range between the 38 and the 50 retracement level. You never typically get counter rallies going up to the 61 to the 78. That is very rare. And so yes, they might push the price up to the 50% retracement. I think that's about as high it will go as it will go. But if we start entering this blue zone, if we start going higher and higher above the 50 retracement level, that's when I'll start to get worried. That is when the bearish case is starting to take a hit. And what I mean by that is that so far the theory behind this, at least on this channel, the way I've been looking at it from the beginning, is that this is just a counter rally within an ongoing downtrend. So this is the downtrend. We've got a counter rally, and so we will resume the downtrend later on. And that's how the markets work. That's how they've always worked. Same thing in the other way around. You have an uptrend and you have a counter correction, and then you have an uptrend. And so I'm going to compare that to the 2018 stock market crash right here. From the all-time highs, we made all-time highs similar to what we're seeing now, and we had a huge move down all the way here, right? And some people thought that this rally here, this rally would be a bull trap, and that this was just a counter rally in an ongoing downtrend. And you can see we had a slight hesitation here at the 50 retracement level, but we continued going on higher. And so when you break the 50 retracement level to go on into the blue zone, that is when the bearish case really takes a hit, and that's when you got to tell yourself, all right, this might not just be a counter rally in an ongoing downtrend. This might be something more, something that will lead perhaps much higher. And so if we take a look at where we are now, I put a resistance level above here, this 285 level, 2850 level. If we break this level, if we start rallying higher and higher, and if we start breaking above this level, that's when I will strongly reconsider the bearish case. And I think as a trader, it's very important to keep an open mind about the future of the stock market. Anything can happen in the stock market. You don't have to be stubborn. And so reconsidering your original hypotheses as important levels break is definitely something important to do in your trading. Now I'm going to clear this chart. It's starting to get a little bit messy here. Another thing I wanted to highlight in this video quickly is the fact that we're backtesting this trend line. This is a trend line that seems not very important right here, but if you look at the weekly chart, you'll notice this is the trend line that has been holding up this bull market for 11 years. And so we're currently backtesting this trend line that we broke a couple weeks ago. We're backtesting it and we're sitting right on it. And so that is extremely tough resistance. So for now, this is just a simple backtest. I do expect us to reverse. But as I always say, the markets do love to trick people. And so hovering above this bull market trend line would, again, be a likely bull trap for some traders. So that is not something that should surprise you if we start popping above it. That would very likely be a false breakout. So let's get back to the daily chart. I'm going to give you guys a couple scenarios that I think may play out over the next few days. As you heard, I am extremely bearish right now. I think a lot of things are coming together for the bearish case. We are at important resistance levels. We're seeing many things develop on the hourly chart. And frankly, the markets are going higher while bad news just keeps on coming out about the economy. So that is something quite surprising here. But despite being very bearish, we don't have a sell signal. In fact, we have nothing but buy signals so far. So if you want to be very safe in your trading, then you're going to need to wait for a sell signal, and that is something I always say. No matter how good a trade setup may be, you're going to need to wait for a sell signal. And I'm personally waiting on two separate sell signals that may come together or at separate times, and that is this trend line here that goes from the low we made here. We have a reaction here. We don't have a third reaction, but I'm convinced many people are looking at this because that's the only thing we have on the daily chart to look at in terms of trend line. And the second thing I'm looking at is this 2600 level, and more specifically this gap here. We gapped once below this level and we gapped once right up to the level. So this is a level that is proven to be very significant. So if we break below that, I think the selling will definitely accelerate. Ideally, I'd like to see one swift move across both of these levels. I do see the potential scenario where we start hovering above this bull market trend line. This would be the perfect bull trap scenario for a reversal after that. And I'm going to show you exactly what I mean. This is exactly what you call an island top reversal. And what I mean by that is that we gapped up from this point here. We closed the day here green. And then we gapped up all the way here above this bull market trend line. And I think a highly probable scenario is that we consolidate around this area, let the bulls and the bears fight each other around this point, and then somewhere around here, mid-April or something, we'll get a gap down over here, and then a follow through to the downside. And this is a perfect island reversal topping pattern, and you can look it up on Google. It's not very common, but when it does form, it's highly effective. And in my experience, this is the typical kind of situation where you'll see this kind of pattern forming right on top of an extremely important level or an extremely important trend line. You'll see this kind of consolidation where you don't know exactly what's going to be happening. Then you see a gap down, follow through, and the downside can be absolutely tremendous. Now again, this is a scenario, and for this pattern to form completely, we need a couple more candles, and we'd need the gap down and then the follow through. So this again is a potential scenario out of many others. I think the conclusion from this video is that I am short. I am looking for a sell signal, but I am still keeping my short hypotheses on the market. Now that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, make sure to like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.